Yeah, let's walk through like an actual example of somebody like
Yeah.
wanting to get, $10,000 right now to get more Bitcoin. Like, can we walk through like that exact example?
Yeah. Yeah. Okay. So let's say, for example, if you use 0.2 Bitcoin as collateral, or 0.2. So 0.2 Bitcoin as collateral, current price of Bitcoin is about 103, 104K. Is
Yep.
it up that
Yep.
much? 104K? Wow. Okay. So if you wanted to take 103, no, if you wanted to take a 10K, $10,000 worth of Bitcoin as a loan, so $10,000 worth of Bitcoin as a loan, you use 0.2 Bitcoin as collateral, $20,500 worth. Your LTV is at 48.63%. Bitcoin would have to drop to 62,500 for you to get liquidated. So it'd have to drop 37.5% for you to get liquidated.
And so maybe just also explain what would happen in the next 6 months in this exact scenario if Bitcoin went from 100 to 150. Like, what would that look like in your new loan?
Yeah. Okay. So let me just copy this here. I'll paste this here. So if Bitcoin goes to 150K, if it goes to 150K, it means that your LTV has dropped. So LTV is your loan divided by your collateral. So your loan divided by your collateral has dropped to 33.3%. And you could technically take on, depending on which lender you're with, some lenders just let you take on more loans if your LTV is under 50%, but others have like certain conditions. So let's say with Ledin, I think you have to have it drop to 25%.
30.
And then
It's
is it 30? Okay.
It's anything below 30. So 30
Anything
is
below 30, okay.
when you can start to withdraw. Yeah.
So at 30%, does that mean, so let's say you can withdraw, you can use that collateral to borrow more fiat, right?
Yes, out of the same loan. Yeah.
Okay. So what that would mean is, let's say it goes to 150K, and let's say you can take on more loans. Let's say you're with Strike. For Strike, I think it's more like it just keeps going. Like you can take more loans whenever you want to, as long as your LTV is below 50%. But just for this example, I don't know the case here, but let's say for this example, you want to bring it back up to 50%. You can now borrow another $5,000. So you can borrow another $5,000 against your collateral.
Same collateral. Yeah.
Same collateral.
You don't even have to add anything. You can just extract more fiat value out of it.
But then if Bitcoin drops back to 100, then you're going to start getting closer to your liquidation, right? Because you're at 75% then.
Yeah. So if it goes based on this trend, let's say it does drop, I think it would drop to like 125K. So what's been happening, it goes up 25% or 25,000, and then it drops it goes up 50,000 from the bottom, then it drops 25,000. And it goes up another 50,000, drops 25,000. Goes up another 50,000. So let's say, for example, it goes to 150K, then it drops to 125K. And then that's the support at the bottom. I mean, it seems like that's exactly what's happening, because the top here was around 125K. So let's say it goes back up, goes to 150K, then it drops back down to 125K. Your LTV has dropped to, or it's gone to 60%.
It's pretty interesting. I mean, yeah, it looks like clearly it's been happening in that way. Eventually it won't, but will it go to the upside or to the downside? It's not just going to climb like that forever.
That's true. Yeah. No, but it could. That's the thing. It could, because of the new players that are in the market. They literally have unlimited money.
I mean, it could, but it also could not, right? Like everything's probabilistic.
Yeah.
And it has, which is interesting, but that information itself creates a market that might change based on that information if everybody expects that, right?
Right.
If everybody expects this, and then everybody takes out these loans, and then they're like, okay, well, it's going to 150, but then it'll only go down to 125, so I can extract more value out of it. But then your LTV goes up to 75. You start to maybe get a little bit stressed there, right? So, I don't know. Again, I've made a lot of videos about loans, but I think it's a really good idea to be heavily over collateralized on this, even though Bitcoin has had lower volatility to the downside. I still think it's incredibly a good idea to have a low LTV.
So keep your loan at that 10K, that initial 10K, until you go to like 20% LTV.
Yeah.
Yeah, exactly. I would say that. Like, these are risks. You know, you need to manage your risks. So one way you manage your risk is by not doing your whole stack into a leverage like this. One way is by using the most trusted platform. And the other way is by over collateralizing, right? And you're mitigating every single one of these risks along this experience if you are trying to borrow against your Bitcoin, right?
Yeah,
I would say that there's a couple different. Sorry, go ahead, Rajat.
Oh, I was gonna say, if you're gonna take a loan, like you should be very smart with it. We don't know where Bitcoin is gonna go in the short term. We have no idea. We don't want you to get liquidated. So if you can, like my recommendation is take a smaller percentage of your Bitcoin as collateral, and then if you can, pay back the loan and decrease your LTV. But at a point, I think there's a point where if you get your LTV low enough, then you probably won't get liquidated.
Yes, right? Definitely. Because there's a price in Bitcoin's history, if you look back, where Bitcoin never goes back to that price.
Yeah.
Never. So if somebody created one of these loans for themselves a long time ago, they're not worried at all. It doesn't matter at all to them, right? Because the liquidation price is so low.
And that's what people should be thinking about, like as a long-term thing, right?
Yeah, and to me, if you end up timing this right, if you're over collateralized to weigh out any downturns, there's a concept of never paying this loan back, right? I'm just allowing the Bitcoin to grow in value compared to the loan that is increasing in value as well based on the interest rate, and dollars getting easier and easier to come by, and maybe 10, 20, 30, 50 years down the line, even though the dollar amount of the loan has increased by this 10, 12%, whatever it ends up being per year, it ends up being meaningless because dollars are basically worthless at that point. But yeah, buy, borrow, die. Exactly.
Actually, I want to do a quick calculation for this. So let's say your interest rate is 12.4%. For 20 years, you borrow that Bitcoin or you borrow that fiat. So you borrow for 20 years. Your loan has gone from $10,000 to $103,000. Now that's probably really scary to people. And they're probably thinking, oh no, I don't want that. My loan has increased so much. I'm paying $90,000 in interest. I don't want that. But you also have to consider that your Bitcoin has increased in value. So let's say what do you guys think Bitcoin has what's a conservative growth rate for Bitcoin?
I would say 20 or 25%.
Yeah, I have a mortgage thing that I want to share here right away, and I use 20% just to be conservative for it.
Let's go 20%. So your Bitcoin has grown to $3.9 million.
Well, that's one Bitcoin. So
yeah, that's one. Yeah, you're right.
Your collateral would be that.
That's correct. Yes. So you have 0.2 Bitcoin. Your collateral has grown to 788K, but your LTV has dropped.
Yeah. That's the key. So that for the starting loan, right? Your Bitcoin collateral is worth twice as much as the loan. Now your Bitcoin collateral is worth almost 8 times the loan.
8 times.
So it's relative to each other, right? So yeah, I mean, what an incredible trade right there. And that's the power of really smart long-term duration leverage. Yeah. That's the whole thesis of MicroStrategy, which is why I remain bullish, even though it's been like the worst time as a MicroStrategy holder, because this is exactly the trade they're doing. They're selling equity preferreds that pay a certain interest rate, and they're using the proceeds from that sale to buy Bitcoin. I would rather hold Bitcoin than their preferreds, and that's the same bet they're making. But anyway.
Yeah, it's the strategy that rich people use with other assets, except Bitcoin's totally different than this. And it is one of those things where, because it's so different and so kind of revolutionary in a way, and so different outside of the paradigm that we're all used to, there's tremendous upside here. Tremendous. Like that 788,000 could be 7.8 million for all we know in 20 years from now. Like literally, it could be. Something could happen and it might go to 0 too. But kind of what I always go back to is like, if the upside's that high, and the risk is it going to zero, like the risk reward there are way out, in my opinion. Like the reward potential for this is significantly higher than the worst case scenario with this, right? Especially if you're only using 5 or 10% of your stack. But at that point, we would have to assume that Bitcoin's gone to zero, something happened. But it's like, you don't die. They don't take you in front of the whole town and hang you anymore. Like you just, go back to the life that you had before with what you had before. You just start again. Like nobody dies here in this situation. So it's like, why wouldn't you at least try? Why wouldn't you? This strategy has been proven effective for decades now, in the sense of never selling your assets, only lending against them to acquire more assets. That's essentially the rich dad, poor dad strategy, where you let equity build up in a house, you pull that equity out, you buy another house, both equities go up, you take the equity out, you buy another house. It's the exact same concept, except I would argue that it's actually much less risky too, because there's less factors involved. There's no neighborhoods that could go to shit. There's no tenants involved. There's no new roof you need to put on it. There's no, on and on and on.
And one thing I'll just say here is, to be the devil's advocate, is one of the values of Bitcoin is the fact of self-custody, of being able to hold it yourself. And you give that up by doing these loan agreements. Yep. Whereas if you do this with stocks or even with real estate, you don't really own those assets. Like they can always be confiscated from you to some respect. Whereas Bitcoin in self-custody has this power of self-custody that no other asset, in my opinion, really has. So you are giving that up by doing this loan agreement. And that's why I would only do a small portion of my stack. And I have a loan with this, and it's a very small portion of my stack because of how much I value the concept and the idea of self-custody. So that is something that should be known, and a real differentiator for a Bitcoin-backed loan compared to other asset-backed loans, in my opinion.
Yeah, this is one of the things that you have to understand. So any Bitcoin that you give to your lender is at risk.
Yep.
Yes.
It could be taken from you, right? And you may never get it back. So there's multiple reasons for why that could happen. So number one, let's say the U.S. government says we can't allow people to have their Bitcoin back. We need it for our strategic purposes. I don't think that's going to happen, but it could. Nobody can stop that from happening. The second one would be, let's say your lender is actually let's say, for example, you're like Ledin, for example. Let's say they're actually like some crazy gamblers in the background, and they're borrowing your Bitcoin. They're borrowing against your Bitcoin,
like FTX was.
Right. And you can't prove that that's not going to happen, right? So any Bitcoin that you give them, that's at risk. You have to understand that. And then on top of that, if Bitcoin's price does fall, let's say right now, I think if institutional investors weren't in this, then we would probably be a lot lower, right? Because there's a shitload of Bitcoin just being sold into the market. So I think that's one of the things. If Bitcoin's price does fall unexpectedly, and if there's like a wick down 80, 90%, your stack is going to be liquidated. So that's something you have to remember.
Yeah, exactly. And there's going to be a lot of players, like even JP Morgan talked about just recently, talking about how they're going to offer Bitcoin backed borrowing and lending products for their clients at some point. These people, there's a reason that these people want to do that. One of them is that they can make, the spread, right? They can have an over collateralized loan and make lending really easy, and have that spread. The other concept is that some people doing this are not going to be responsible. They're going to under collateralize it. They're going to not pay attention to it. And then JP Morgan is just going to get access to that at incredible rates, because they're going to be able to liquidate you in some crazy tail risk event flash crash, right? Yeah, I would just say there's a reason that these players are coming in, and it's because they want your Bitcoin, and you need to re-listen to this, go watch the videos all of us have made on this subject, do your research, protect yourself figure out every risk of this, many we've talked about, and protect yourself at every single point if you're going to proceed.
Yeah.
We did a really good video on this in the Maple community, actually.
Oh yeah, that's true. That's probably our best one, I would say. That's
only on Maple Bitcoin School too. We have like 6, 7, 8 videos in there that we've done, about an hour-long discussions on lending against Bitcoin, on how to protect your private keys, on the most optimal way to buy Bitcoin. And so those are all in the Bitcoin school or Maple Bitcoin school. Do you guys have the link to that? We'll just throw in the chat right now while we're talking about it, in case anybody wants to watch it. I was going to say final thoughts, but do you guys have any final thoughts on it before we kind of wrap things up here?
6, 7.
You
said
can.
6,
One
7.
thing that I wanted to say is that you could use this to buy more Bitcoin. You're basically taking a leveraged position on Bitcoin. But what you could do is you could actually turn that around, and you can add the Bitcoin that you buy into your lender's platform as collateral, and you can just automatically decrease your LTV immediately. So actually, let's take a look at that as an example here. I think that's pretty cool.
And Ledin actually has a specific loan product that just does that for you right away and adds it as collateral.
Which is
to
pretty
me,
sick.
It's pretty awesome. I haven't actually done that one, and I'm thinking about doing a small.
It's not available in Canada.
Oh dang! Well,
Yeah,
never mind.
B2X, right? I think that's what it's called.
B2X, yeah.
Yeah. So let's say you get 0.2 Bitcoin as collateral. You take on a $10,000 loan. Let's say this is equivalent to 0.1 Bitcoin. So what you would do is you take 0.2 Bitcoin as collateral, or you use 0.2 Bitcoin as collateral. You give it to them. You get a loan for $10,000 worth of fiat. You buy 0.1 Bitcoin. You add that to your collateral. So now you have 0.3 Bitcoin as collateral. Your LTV has automatically dropped to 32%. And now Bitcoin's price has to fall to 41K for you to get liquidated. That's pretty good.
That's really good.
That's the safest way to do it, I would say, right?
Yeah.
And then this is how you get more Bitcoin too.
And then the way I would think about that is the Bitcoin that you've acquired is now encumbered by the interest rate. So any increase in that Bitcoin's value, you could minus the cost of capital, of the cost of the interest rate. So you basically have Bitcoin price increase minus the 10-12% that you're paying. That's one way to conceptualize this, because it's not pure Bitcoin, right? It has a cost, an interest rate cost to it.
Yep. Right.
Yeah. But after at a certain interest rate, it's worth it.
Yes.
Like if you can get let's say you can get this loan instead of like Ledin's at 13%. Let's say you could get it at 8% or 9%, 10%. You're pretty good.
Essentially, what you're doing here is you're betting. This is a bet saying that you think that Bitcoin's going to outperform the interest rate on the loan.
Exactly.
Yeah.
So you think that Bitcoin's going to, let's say you set this up. I know it's kind of year to year, but you can roll them over if I'm not mistaken.
Yes.
So if you kind of take like a 5-year approach with this and you say, okay, over the next 5 years, do I think Bitcoin's going to outperform 12% in the case of Ledin? And if the answer to that is yes, I mean, as long as you're paying attention to your LTV and if you kind of understand what it is and, you're checking on it, you're probably going to win the trade. If you believe that Bitcoin's going to outperform 12% compound annual growth rate for the next 5 years, which I'm thinking most people here would be pretty disappointed if it didn't. So that's essentially what people are doing.
Yep.
Go ahead.
No. I didn't have anything to add.
I was going to say, you can actually, so I have another calculator here where you can do exactly the same thing.
Okay, so this is with paying monthly interest towards it, and then you have Bitcoin's growth rate as well.
So let's say you had, let's say you were planning to DCA $500 per month. Instead of DCAing it, you could borrow, and then you can pay back the loan with that $500 per month.
Right. Yeah. And bring all that purchasing power to the present.
Yes. Yeah. Yes. Oh, you can see here. So you would have bought $10,000 worth at payoff. So in 22 months. So if you just scroll down here, you can see month 23, your loan is paid off. After 22 months, we'll go 23 months. So after 23 months, your Bitcoin is worth $15,337. You've bought almost 10 million Satoshis. And at that point, let's see here. At that point, one Bitcoin should be worth something like 100 or 153K or so.
So your cost for this was 11,500, and the value is now 15,300.
Yeah.
Yeah. Okay. And that's with a high interest rate. 12% is high. It's high.
If you go 8%, let's go 22 months. Oh, 21 months. So if you have 8% interest rate, the Bitcoin would be worth 17,007 or 14,777. You would have paid 10,500 or so.
Right.
10,700.
Yeah. I mean, it all makes sense. It's just yeah, so there's all the risks we talked about, and then there's short-term volatility risk where you have to have these loan terms either be able to be refinanced or long-term enough that you're able to smooth out Bitcoin's price action. Think something like the 50-day moving average of Bitcoin's price as opposed to the daily or weekly candles.
Yeah.
Because over the long term, Bitcoin's easily going to annually outperform 12% a year, but it isn't going to do that every single year. If there's a bear market, if the 4-year cycles continue or whatever, there's going to be one year where if you only do this for a year, you're going to get screwed. If again, there's a lot of ifs there, but if the bear market happens, if you take out this loan specifically on that year, and you're not able to refinance it, you're not able to smooth out that volatility and see the upside of Bitcoin, then that's not the move. If you're struggling to figure out all this Bitcoin stuff and just want a one-on-one helping hand, I now do consults, which you can book through the link in my description. We can cover moving your Bitcoin off of an exchange into a hardware wallet, security best practices, and basically anything else that you want to go over. Just let me know what it is, and we'll figure out a time that works for you to book in a consult. If you're looking to get yourself some Bitcoin, you can use my link in the description as well for Bitcoin Well, and it is the best possible way, in my opinion, to buy Bitcoin. It's a non-custodial exchange, which means there's no counterparty risk. You send the money, they send you Bitcoin directly, and they also have non-KYC options available, and they have the lowest spreads and fees in the US and Canada. If you want to secure your passphrase for future generations or just in a way that is very safe and secure, I would recommend Stampseed. You can use my code BTC not crypto 15 and get 15% off. They have a titanium seed plate and a stamping kit that works really well, and it is a great product. Check them out as well with the link in the description.